Good morning, good morning. My name is Rametse. I am the CEO and the founder of KGB Services. We are accredited with SANAS. We issue certificate based on the information that you're giving us. And with that, what we do, we issue different kinds of certificate: ownership certificate, full certificate, JV, joint venture certificate, consortium certificate, independent competent person report. We do all those things. We are passionate about contributing to the growth of South African economy. But today I'm not there. Today I'm here on interest rate. Interest rate. Everyone who is working knows about interest rate. Ne? So today we are on interest rate. Maybe before we get to interest rate, let's talk about inflation. What is inflation? Inflation is the rate at which prices of goods and services is going up and down every day. That is that rate of bread, milk, sugar, salt, and all those things is the inflation, that rate. But let's talk about the interest rate that which we pay. How does it come about? Ne? Is it good or bad? So what happens is that we've got South African Reserve Bank. So South African Reserve Bank, what they would do, we have our governor, Mr. Lesetja Kganyago. So Mr. Lesetja Kganyago, together with his team, monetary policy committee, what they would do, they would sit and say, when we look at inflation, where does it put us as South Africa? Do we have to increase it or do we have to increase it? Then they do what we call setting up of repo rate. They set a repo rate. Ne? Then repo rate is what is going to inform them to charge to commercial banks, which becomes interest rate. So that interest rate, they charge it to commercial banks, because remember, commercial banks, they borrow money from South African Reserve Bank. Ne? So this commercial banks is your, let's try and count them. I hope I don't forget any. It's your Time Bank, Capitec, FNB, Standard Bank, Nedbank, ABSA, African Bank. I hope I don't forget. But I was not advertising the banks. I was just mentioning the commercial banks. So what commercial banks then do after Lesetja and Mr. Lesetja Kganyago and the team has decided, they come up with what we call prime lending rate that they give it to us. Currently today is the 22nd of July 2026. The inflation rate is sitting at 4.5. And Mr. Lesetja Kganyago, together with the team, they need to cap it down. And the repo rate is sitting at 7%. And the interest rate that we pay is 10.5. That 10.5, not everyone is paying it, depending on your credit worthiness. Other people are paying far more, hence you hear the prime minus, prime plus. Ne? That prime rate is important depending on your credit score, where you are. The bank will determine the kind of risk they need to give it to you. Then the whole thing of interest rate sit there to say you are going to pay more or you're going to pay less, depending on the risk. And it's controlled by who? Mr. Lesetja Kganyago, together with his team. Because at any given time on every quarter of the year, they sit as a committee and decide. It's like they're saying, this is a tap where we open the water. So they open, that tap opens the flow of movement of money. They can increase it or they can decrease it. So when they increase it, the buying of houses, or what the repayment, not the buying. At this time, you have already bought. So the repayment, it becomes very high when they increase repo rate. Why? Your prime lending rate is now higher. Therefore, you pay more. It means all your repayment, bond higher, repayment of loan higher, repayment of credit card higher, repayment of overdraft higher, repayment of everything goes higher. And it's not just that repayment of everything going higher, it's everything including the food. Let's give an example. We have a logistic company. This logistic company has a warehouse which they are paying on a month to month if they bought it, if they are not renting it out. Even if they are renting it out, the landlord will increase the rental. And if they bought it through the bank, they're paying the bank, the bank will then increase the interest on the repayment of that warehouse. And now on the trucks, there's going to be also a repayment which is higher. So now what do? They take that price and take it down to the goods and services that they are transporting. So it means even the bread that we are going to be eating on a day-to-day is now affected. Why? Because the committee has increased the repo rate. So hence, every time when the repo rate increases, the cost of living becomes higher and higher. So when we talk about interest rate, we talk about how things are going to be expensive or how things are going to be less expensive. It's about affordability of goods and services. So the best way is for us to try and manage our debts that we have nicely so that our credit can be okay. And the best scenario is to try and not have any loan where possible, so that you don't have to be paying more, because you are still going to be paying more on your daily grocery. So that is the interest rate, how it affects us as ordinary citizens. Because even if you don't have a loan, even if you don't have a car, one way or the other, the interest rate is going to affect you. Why? Because South African Reserve Bank has decided whether to increase or to decrease the repo rate. I hope it makes sense. I wanted to simplify it to all of us according to my understanding, and I hope it helps, and I hope it makes us make better decisions around what we are buying on credit and what we are not buying on credit because of the repayment. That is the interest rate issue. I hope it can help all of us. Thank you so much. Bye.